Good morning, everyone. Hey, Rick Kaufman here. And this is We Can Do It Wednesday. It's hump day, but but I tell you what, the markets are definitely humping. This is, the market's saying we can do it. They're giving it another try after basically, I won't say an epic fail for yesterday, but the markets failed yesterday to make a rally. And actually, it almost looks like a carbon copy as far as the internals go. And the markets are concerned that's setting up here this morning. And so I've got my coffee here. And we are going to take a look at some of these things. Also, I'm going to show you on my journal a little bit about my play-by-play yesterday and what I saw in the markets, and we'll kind of go from there. And that's we took a position yesterday on Home Depot. My trade plan really was not to take a position, but we did that towards the end of the day as Home Depot's been setting up and holding up rather well in this market. So we took gave ourselves the gift of time, but took a pretty decent position and for a nice little credit. So we'll see how that plays out. Right now, there's a lot of stocks that are setting up. And but before we do, let's get into a little bit of housekeeping. Those of you that have been following my videos know that these videos are part of my trade journal and my journey, and it's part of my own personal education and review. I add these videos, the links into my journal each and every day, and so I can go back and review them to make sure that my analysis on the markets and then review them with the play by play and that I write out in my journal each and every day as the day goes on. And that way, we can I can take a look at just how well I'm doing as far as forecasting what I'm seeing in the market and how that may play out. I'm not a financial advisor, and nor do I give financial advice, and nothing in these videos should be misconstrued as financial advice. I do not make trade recommendations. If the trades that I am currently putting on are based on my own personal analysis and what I think is best for my account and size and for my risk. I am a rather risk adverse trader, an older trader that I don't like to put a lot of money at risk. But we do look at certain levels, key levels, and look for high probability trades. I like to trade the SPX, the RUT, because of their favorable tax treatment, but I also trade some of the basic tickers that a lot of option traders trade, such as the Teslas, the Apples, the Amazons, and those the Fang stocks and many others. But again, I look at what I can. I want the biggest bang for the buck, but at the same time, I look for what I think are good entries. So, with that being said, let's get into this analysis. Yesterday, we were talking about the VIX and how the VIX was probably one of the most important charts as far as what we're looking at here, with the volatility being up. The volatility is still up over 23. Let's jump into our charts here and take a look at the VIX. The VIX is coming down, but it's hanging out. I've got this trend line coming down here. Let's zap out here just a bit. I've got this trend line coming down from January, and following this, we broke the trend here the other day on what day would that have been? Friday. So we broke the trend on Friday and pushed way up here to almost 30, 29, 20, or almost 29. And that, as you can see, that's about where it typically goes, and then pulls back. It's doing it's kind of doing the same thing. If we get a spike back over 25 and it holds and it closes above the 25, or we get up to 30, then we've got a lot things we need to concern about. Based on what I'm seeing here in the RAF, it looks like the VIX may be running out of steam. So today's Fed announcement could spoil the end of this here, and we may settle down, and the volatility will settle down, giving us some good entries. So that's what I'm looking for today, as far as the to happen. I believe the Fed announcement is going to be a nothing burger. I think they're going to kick the can down the road again. As far as the tapering, I think with the way the markets have been behaving and the seasonality of September and October, that it's, they're going to probably wait till November, December. And that's pretty much what people in the media and other, pundits and experts are saying also. And by the looks of the VIX, I would say that the markets may be feeling that might be the case too, as the volatility begins to subside. But we're still hanging out above 23, so it is an area of, to be cautious. It's an area to, watch your P's and Q's, control your risk, and not go in, big on any big bets that you're going to be putting on the market or on any particular place. Look for good entries, and I think there is a ton of stocks that are setting up. I mean, we're looking at Google, Tesla. There are so many tickers right now that are looking, that are popping and that are setting up here. So we just at this very moment, we got a sell signal that just popped up here on the RAF on the VIX. We'll see if that holds. We just dropped down below 23 on the VIX. It's down to 22.97. So that could be a good sign. So we'll probably see a pop in the S&P, and a move upward. Now the sell signal just went away, so we're flirting with that zone right now. So we'll see. And if you look here at at the sell signals, we are right at about that top range where we've been pretty much all year long, when the VIX makes the turn to go lower. So let's see. So the 22.95, if it goes 22.96, 22.97, we'll lose that signal. So we need to have this come down a little bit more. So we're going to keep, we'll keep an eyeball on this, and hopefully the VIX will begin to drop in volatility. That's pretty cool to what we're seeing here live here this morning. It's 5:53 in the morning. Obviously, it's pre-market. Anything can happen. And at the end of the day, I really don't know what's going to happen. I'm just speculating here of what I think and what I see here based on, when I look at my charts, typically I'll look at a chart and then I look left. In other words, I say, where has this come from? Where has it been? And I look at patterns, and I look at the history of a chart, and that will help me maybe make a determination what I think will happen going forward. Doesn't necessarily mean that it will, but it may play out in our favor. So let's jump into the Dow. As you know, the Dow's been very, very bullish and everything. We did close yesterday, below our, we did close below the 21, where we're below the 21 now, and we'll see if we can hold there. In pre-market last night in the futures, when I looked at it about 8:15 last night, that's Eastern time, when the futures opened, the markets were all red, and they were looking pretty ugly. For the most part, we are getting a buy signal today on the Dow. So the Dow's at 3 ATR, and typically when we hit 3 ATR, it begins to pull back up, and so this was a pretty hard fall. So I'm going to suspect we're going to get once this levels out, and I think if we get the news today out of the Fed, the Dow is going to level out, and we are going to start making the march back up here, and get things in alignment, get back above the 21, get our stacked EMAs and back above the daily 50. And I think we'll be sitting in pretty good shape. When we look at the The intraday on the charts, we have buy signals, with the exception that we have a sell signal on the 15 and on the 30. But we on our 2 hour and 4 hour, we have buy signals. So looks like on these have begin to curl up and moving upwards. The 2 hour and 4 hour looks like it's leveling off, and we may be moving to the upside on our longer term intraday charts. So this all is looking positive. So we're not out of the storm yet. So we'll keep a close eye on that. Let's take a look at the Russell. The Russell has been trading in this very tight zone between -1 ATR and 1 ATR. And so it's been in a tight range and really consolidating quite a bit. And, we have been in a weekly squeeze this whole period of time, and the squeeze is not fired. It needs a lot of momentum, but we are approaching some exhaustion levels on the daily chart. So we may get a turnaround on this, and we'll see a bounce and push upwards. So this might be looking favorable going forward on the Russell. Not sure, whether or not to play this to the upside or put a credit spread, maybe take a small position and put a credit spread on the Russell, and play it back up to this level here. And if this is truly the bottom, or we're close to a bottom on this, but again, it's trading in this tight range, and no signs that it's preparing for any kind of breakout as of yet. So we need a lot of momentum, and the weakness in the markets just may not be the fuel to get it through the resistance above here, on above the, say, the 23, we'll just call it 2350. And so we just, there's a lot of work to do on it. So, but we'll keep a close eye on that, and we'll wait till the Fed comes out before we make a decision if I would want to play something on the small caps or in the right now, in the Russell. So let's take a look at the S&Ps. As you saw, the S&Ps the VIX have made a little drop here in the S&Ps. We have an aim, so we have the ready, aim, fire. We've been holding this level here as support. I mean, we did pierce it quite a bit, come down to the 42.88 to the 61.8 retracement, and then pulled back up yesterday. Like I said, yesterday was not an epic fail, but the markets made an attempt, but it may have been just one day too early. We'll see if today we can get the fuel behind the market, the buyers come, a little more buying coming in, and and keep the ticks up above the 600. They did a great job yesterday, but the buying sprees were short-lived, and the sellers kept piling in, and people kept selling off, taking profits, all those type of things. So just was a really choppy day yesterday. And I didn't get chopped up. We fared rather well. Didn't do great, but we kind of just were flat on our account yesterday, which I'll take that on a day like yesterday. So like I said, I waited till towards the tail end of the day to jump into my Home Depot position, and I'll show that to you here in a moment. And so this is kind of what we're seeing shaping up here. On the intraday, we've got a buy signal on the 4 hour. And the 4 hour, as you can see here, the 21, our ATRs, our Keltner channels are beginning to curl up, and we got a pretty nice pronounced hook coming right here on the 2 hour, and possibly getting a little bit of movement to the upside. We've got active sell signals on the 30 and the 15-minute. I believe because of the longer term time frame, these will be short-lived. So these are probably just going to be noise that we see on the intraday chart, and we will push higher, go, so we can continue on our shorter terms. We can see, hopefully we'll continue seeing, higher highs and higher lows, and the 21 and everything is in the Kellner channels, everything's pointing to the upside. We'll watch this on the intraday to see if the structure of this chart stays the same, and hopefully we'll see this structure of the 2 hour and the 4 hour chart begin to reverse and start to level off and move to the upside. That's what I'm keeping an eye out. I really think that the worst may be over, but how soon we'll get back to the new highs. It probably won't be the end of this month, but it'll probably be sometime in October. But we'll probably run into a little bit of consolidation, which would be great because that should give us the explosive push into the end of October, 1st November, December, which like I said, there's a lot of great setups out there. So positioning my account in a way so we can capitalize on some of those. So that's how that's shaping up here. Let's take a look at the Qs. And when the Qs are really kind of the same situation, we've got an aim here on the Qs. The Qs are holding this 15,000 level as support, which I've identified that as a major line of support for the Qs, and I felt like we did pierce it. We pierced it on Friday, we pierced it on yesterday, and today, but we are holding that, and we're hitting some resistance at the daily 50. So I'm sorry, excuse me, just above the 5,100, 15,100. So we need to, get back above the 15,265 and above the 21, so we can gain some structure back here. But again, very, very bullish. We did not, we pierced the 15,000 on the week. We pulled back to this level of support here on these retracements. I've got a couple retracements here and some levels I've identified. And so we are looking at those key spots there to hold, and we just need to get back above the 15,265. May not happen this week, but keep an eye on the FANG stocks. Where the FANG stocks go, this is where the Qs will go, and where the S&Ps will go. Let's look at the intraday and see if we see the same thing on the intraday. We see the same, let's see, on the 4 hour, it looks like our negative Keltner channels are 1 ATR, 2 and 3 ATR are leveling off here as we hold this 15,000. We've got a buy signal that's firing here earlier this morning, and we've got a buy signal in the 2 hour. We do, just as the other indices, we have active sell signals on the shorter term. But we do have the Kellner channels. Everything's pointing to the upside here on our 30-minute. It's a little flat on here, possibly, but we are beginning to go in the right direction. So if we can curl this up and keep this direction going up here on the 30 and the 15-minute, then the 2 hour should follow, as the 4 hour should follow that direction, and giving us a strong signal here on our daily. And the weekly chart is setting up, and the structure of the weekly chart looks great. And so again, and I'm sitting here watching the VIX drop as we're talking, which is all good. I wanted to get below, back into this. This is that trend line that I drew. I wanted to see drop below and get below that trend line. It's been hugging that trend line and hold it. It held it as support yesterday. We needed to get below that and have that become resistance, and then we might be able to push things up a little higher. So that's kind of what we're looking at here. So let's take a look at, I've got a Home Depot trade on that I added. So, and the Home Depot, basically we got in right here at the 78.6. Here it's held this as support, we are, right at about the same position there. So there's not showing a lot of activity here. As if we look at the intraday, again, the intraday chart, we've got a little curl to the downside here. So we may see a drop in Home Depot this morning, only to push higher. I think it'll be short-lived if the markets respond in kind, and we'll see. Um, the reason why I took this out and I took a November call on Home Depot, they do have earnings coming up in November 16th. So it appears that Home Depot runs into earnings for the most part and has done so in the past. And we are looking, as Home Depot's been strong since its past earnings, and we've got a great structure here on our weekly chart. And as it has been holding up very well, Friday's candle, we have this big topping wick here on Friday's candle, but it held up. It still held the 1 ATR as support. So it did a great job. It did drop, and on Monday's pushback, and we got a sell signal on the daily, but then we came back and we had this nice doji candle here. So we had this big tug of war between the buyers and the sellers, and then we popped here, pushed up to new highs. The sellers came in, as you saw, as it shows here on the VIX, and so we had some volatility and pushed the price back down to close at 334.22. And so we will see how we fare here. Now, I mentioned to you that I added on my journal, my play-by-play. This is what I do. After I post my pictures and things like that, and then I add play-by-play of what I see and to go along with this. So, we talked about the VIX pulling back a bit, but it still hung around 23, and the ticks were plus 200. With the VIX begins to drop in order to give the price to be able to move up, there's a lot of resistance. And then the first 30 minutes of the markets, the ticks have stayed up in positive territory with only a dip to negative 300. And then the VIX went below 23, but had gone back up to 23.46. This is not what I was wanting to see. I would like to see the tick stay above zero to indicate that the buyers are coming in. However, it does look good for turnaround Tuesday, but it can turn against us in a minute. This is not where I would like to add more risk. And then at 12 p.m., the markets have been a bit choppy. Tesla and Home Depot both look great. So at this point in time, I was starting to look at Home Depot, study the charts, and begin to look at that. Look great, and they still would like to see the VIX calm down just a bit above. It's still above the 23.23, and the ticks have been doing very good. The markets just are not responding with the downside momentum being so strong, and the VIX may come into a squeeze going into the Fed meeting today. So we may see that. At 1 p.m., the VIX is still holding above 23. I took a screenshot of what I was holding at the time. And then at 3 p.m., the markets are holding support and the ticks are up. The VIX is in the last hour of the day. I feel that the markets are just choppy due to the Fed meeting, which is today. And then I added at 3:30, I added three contracts on a vertical Home Depot for $1.70. That's about a 7% risk on this one account that I have here. And then in markets close, it was the same as yesterday. The buyers came in and pushed the price up, only to sell off in the last 15 minutes. This makes tomorrow a little questionable. We'll just need to wait and see. Added Home Depot, but may have just added a little bit earlier. Should have waited a little closer to the close. There are a lot of great setups if we get to move up tomorrow, and the VIX can begin to settle down. So that was my analysis of my play-by-play yesterday. And so I do that every day, put that in my journal, and then I can turn around and reflect back to my videos here. So if you like what you see, click the like button, subscribe, make a comment, let us know how we're doing. Other than that, this is We Can Do It Wednesday. So the markets are going to chug along. Let's keep our fingers crossed. Let's sit tight. Let's wait to see what the Fed comes out with. But be prepared. Be prepared and do your due diligence. And remember, stocks and options are not suitable for everyone. They do have risk. So trade your own money. You can lose your own money. So with that being said, you guys have an awesome day. We'll talk to you tomorrow.